This video is for educational and informational purpose only. Please consult your financial advisor before investing your money in stock market. Hello friends, today we are going to do a bank comparison for leading banks in India. Here we have considered IDBI, ICICI, IndusInd, Axis, HDFC, Bandhan Bank, Yes Bank, IDFC First Bank, Kotak and AU Small Finance Bank. Before moving towards the comparison, please note that Bandhan Bank and AU Small Finance Bank, they were the NBFC previously and they have been recently listed and provided a license for the banks. First, we talk about the price to book ratio. This will be considered for your price risk at what price you are purchasing a stock. Currently, if we see the Kotak has been most expensive and trading at 6.07 and has the highest price risk. The lowest price risk is for IDBI trading at 1.17, and if we balance it neither from a very high risk or very advantageous position, HDFC is trading at 3.07. Next is CASA. Basically, it is a current and saving account deposits. From here, the bank get the cheapest money for lending. Highest the CASA, the better for bank. Anything considered above 40 is good for bank. Here, the Kotak and ICICI are nearly the same and have a high CASA ratio. Lowest CASA ratio is for IDFC Bank. For rest bank, HDFC, Axis, Bandhan, IndusInd, NAU Small Finance Bank is a considerable CASA ratio. Next, we talk about ROE. Usually for banks, ROE is low and anything above 12 is considered to be good. Highest ROE as per date is provided by Bandhan Bank and lowest is for IDBI, which is in negative. Guys, just to remind you again that Bandhan Bank has been recently provided a license for bank. Previously, it was a NBFC. So do consider in mind while evaluating the different banks. Next is ROA, return on assets. It is basically how efficiently any company is utilizing their assets to generate income. For banks, again, it usually is low and it needs to be considered anything above 1 is good. Highest ROA is for Bandhan Bank and lowest is for IDBI, which is in negative. For HDFC, Kotak, IndusInd and AU Small is a considerably good ratio for ROA. Next, we talk about non-performing assets. This is the most crucial part of any bank. This defines that how strong you identify your portfolio before lending. So you have a less cases of defaults. Best is for HDFC Bank, which is 0.39, and worst is for IDBI Bank. Usually it needs to be less than 1, which is good for any kind of bank. Next, we talk about net interest margin. This is basically a difference between what the bank pays and how much interest it gets as the income. The best is for Bandhan Bank, it is around 8.10% net interest margin, and worst is for IDFC Bank. Anything above 4 is good to be considered. Next, we talk about capital adequacy ratio. This is usually required in case any resolvency happens for bank to cover your risk. As per industry and RBI guidelines, for private bank it needs to be above 9% and for PSU bank it needs to be above 12%. For while evaluating, for me, I consider it needs to be above 14. If you see, the Bandhan Bank has the highest 29.20 and IDBI has the lowest capital adequacy ratio. Rest all banks has enough capital adequacy ratio to be considered. Now we talk about the advanced growth. It is basically how much the bank has done a lending and what is the future growth looks like. But at the same time, it also needs to be considered as risk because it depends what kind of portfolio they have and how strong they evaluate before lending. So more the advanced growth can have a larger NPA as well. Here the best is for AU Small Finance Bank and IDFC Bank. Anything above 20 can be considered as a good because if you invest and if they provide a kind of a growth of a 20%, you can double your money in every 3 years. Thank you friends. If you find this video useful, please like and subscribe to channel. Thank you.